Testing, testing, 1, 2, 3. Testing, testing, 1, 2, 3. Testing, testing, 1, 2, 3. Good afternoon, ladies and gentlemen. Good afternoon. Welcome to Paul's Monday Market Update, 179 for Monday, the 31st of March, 2025. I hope you're all well. Hope you're enjoying the rather eventful start to the week we're having. I did say it was going to be an eventful year. Most importantly, for those of you joining us either on the here on the Zoom call or on the YouTube live stream, if you can just confirm that you can hear my voice and that you can see the slides, that would be greatly appreciated, and then we will crack on. For those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can cover, okay, in the next 30 minutes. I'm really looking to basically look at strength and weakness within FX indices and commodities markets. We'll have a look at some charts of interest, and then we'll have a look at the live markets. This is not a signal service. It is not a trade recommendations. It is just basically what I am looking at myself, and hopefully it might be of some help or insight to yourselves. As always, you're very welcome here. Just remember that you are ultimately responsible for your own trading decisions. For those of you who want a little bit of help with your trading, the VTP Trader Accountability Group, that will start next week now, okay? Looking at sort of Tuesday of next week for the first calls. If you want some help in basically breaking your bad trading habits and starting to develop a bit of discipline in a group sessions and have somebody and a group hold you accountable, then you might find that group very useful and helpful to you. You can join it either on the bit.ly code there or on the QR code. And for those of you in London this week, I will be speaking at the IX Trader Show. This Friday, I've got 2 slots. I think about 11:30 on a panel and then 1:30 doing a piece on price action combinations. If you're in London, by all means, come along and say hello. And if you're considering going, well, you can get yourself a free ticket using the code Wallace at IX Trader Show. And as I said, if you're there, come up, say hello, and it'd be great to see some of you. As always, if you want a little bit more education and insight this afternoon, we'll be running the Active Trades Monday Market Matters webinar, 2:00 London time. Today, okay, it's all going to be about turn around your trading. That's what we're going to focus on, how to help a trader do that. You know, it's a kind of useful topic as we've come to the end of the first quarter of 2025. As always, you can register on the Active Trades website or on that QR code. And if you want another weekly update, okay, of global markets, then I do one at 7:00 on Wednesday evenings for Admiral Markets. You can join on the bit.ly code there or on the QR code. And as I said, we just basically look at global markets, but we also take a look at UK stocks. Okay, all right, let's dig into what we want to be talking about here today, all right? If you're joining us for the first time or you're at the start of your trading journey, you might look this bit overwhelming or intimidating, but it's just bits that I've cut out of my own weekend model called the STAM, where I'm looking for strength, trend, and momentum, primarily in FX markets, but also in indices and commodities markets. And by doing so, I find it helps me allocate my time, energy, and resources better for the week ahead. So what is this telling us and how can it help us? We are into week 14 of the year there, as you can see, 31st of March, end of the first quarter. Where's the strength and where's the weakness? Well, sterling remains okay. It's top of the pile number. And as I said last week, I was going to be interested to see how that actually ended at the end of last week into this week, based upon what we went through last week in terms of A, UK data, and B, the spring statement. But we have been holding on by our grim teeth to that top spot. And the ones that had been basically, of course, sort of challenging that was, of course, the euro, and maybe we'll get a little bit of a better insight on that when we look at the euro sterling chart in a few moments' time. What we are seeing as well is that Aussie dollar, remains at bottom of the pile, along with Kiwi dollar and also Canadian dollar. Remember, those are the condols. That's what we expect to see and kind of give us an insight into either risk on or risk off sentiment. And you can see there's very much a case of a risk off sentiment there, which has been exacerbated here, by what we've seen in the markets since they opened last night. Basically, what we have seen is, yen strengthening and pretty much, condols there continuing to weaken. And maybe we'll have a little look at Aussie dollar there, when we look at the live markets. And that is just confirming that kind of risk off mentality that we're going to look at and see across the board, based upon what we're expecting to happen from Wednesday, which is, as Mr. Trump says, is his Liberation Day, when tariffs will come in pretty much across the board now. So of course, markets reflected, they kind of took that badly, as we will see in a moment, and that is just exacerbating this kind of risk on, risk off sentiment. It's very much in the case of risk off. Dollar is kind of is a little bit mixed, but I'll explain more of it when we see. But you can see Swiss franc and Japanese yen, they're in the sort of thing, the top half of the STAM, but it's just effectively a case of, as I said, people looking at that kind of risk-off sentiment there, especially when it comes to those condols. When we look at the individual currencies, just look at that for the euro and sterling pairs, that is just showing you how over the last couple of months we've gone from them being, kind of weak and shorting now to being the strength, 1 and 2, and that just helps, confirms and backs up my own analysis. And of course, I don't want to fight that. I want to work with it where I can. When I switch across to looking at the indices, well, what's pretty clear to me, is that last week all of those American indexes, they went into into STAM 1S, strategic selling, all right, and that's what we're looking at. And also there's some pretty bearish weekly charts, which we will once again look at in a moment. FTSE has also gone sort of tactically short. ASX Aussie, is also strategic short, probably maybe not a massive shock when we're seeing that with the Aussie dollar as well. What we have seen is, of course, gold and silver remain sort of strategic buys, and we'll look at that in a moment. The VIX is bearish, all right, and even Bitcoin is bearish, all right. So you can get an indication of what the score is there in terms of how markets are reacting to the sort of data over the last few days. I suspect it's going to be a rather interesting next couple of days, ladies and gentlemen. But I said that, I said that at the in fact, I said that at the start of the year. But I said that last week, that these 10 days running up to the kind of tariff days would be incredibly volatile and be used to see all sorts of swings happening in markets. So, and that's what we're getting to see here. And on top of that, of course, today is end of the month, and it's also end of the financial quarter, and for some it'll be the end of financial year, certainly some of companies here in the UK. We also have quite a bit of data coming out later this week. A lot of that to do with US jobs numbers. So you've got ADP on Wednesday, you've got unemployment claims Thursday, and then of course you've got non-farm payrolls and average hourly earnings on Friday, just for the US. We have, we're going to look at Aussie, but we've got the Aussie cash rate, in terms of the interest rates tomorrow, going over tonight into tomorrow. People aren't expecting any more cuts on that, but of course, any change to that will provide a little bit of volatility into the market. So everybody's on their chin straps, all right? Everybody's on the bones of their backside, and there's not many people who are very, very happy. And when we look at the live markets, you'll see how that is reflecting, in terms of those charts, all right? So that's the kind of what we're taking from this and into the week ahead. So let's have a little look at some charts of interest. I always put up a couple of charts that you might just want to take away and add some interest to. So despite all the other stuff that's going on with, tariffs and markets, we do still have some earnings coming out this week. And one of them is RCAT, Red Cat Holdings. Maybe you know of these, maybe you don't. These are primarily their drone operators. Now, I have to, in the interest of full disclosure, of course, I have up until recently been working as a director in a drone defense business. So I take a bit of an interest in this. Okay, anyway, I know enough to be dangerous. That's the way I would claim. All right, but I take an interest in it because just of the way that it is a market that is still developing. Red Cat, okay, as I said, drone operators and people can go in to look into the absolute details of it. But what we have seen, okay, at the end of last year, and this is what I've put on here as the weekly chart as always. It was pretty much a drone operator, okay, that was really just going north of just a dollar, okay, and then as we started to see basically, pretty much with a lot of stocks last year, okay, into that kind of end of Q3. Calendar Q3, things started to get a bit bullish, and then of course we had Mr. President Trump winning, but also comments by Mr. Musk about how the Lockheed Martin F-35 was a waste of money and actually the future was drones. And that, along with some other elements, just shoved RCAT, okay? Red Cat up from $3 up to, as you can see, just $15, okay? Tickle the soft underbelly of $15 there. And then what did we print here? Yeah, what did we print there? That is, it's a bearish engulfing candle. It's a bearish key reversal candle, price pushed to a new high, but closed beneath the low of the previous candle. Okay. And then what we've seen since then is basically, a drift away back down. And where have we drifted back down to? Well, as you can see, we've not closed beneath the round number of $5. Okay. And we've also got the weekly 50 holding there. So they are releasing their earnings this evening after markets close. So I'll be interested to see whether there's good enough news to get us pumping back up towards that 20-period moving average, or whether the news is whether the earnings are poor in a market environment that's presently poor, in which case I'd be seeing 5 get to 5 and the 50-period moving average get tested. That's the scenario I'd be looking at later on today. Okay, going from one small startup to a behemoth, all right, of banking. So this is Deutsche Bank, okay, and for a change, this is on the monthly chart rather than the weekly chart, but there is a good reason for it, and hopefully you can see this chart. So why are we looking at Deutsche Bank? Well, of course, everybody is, of course, on the bearish side. Everybody's on the risk-off sentiment, but actually, we're always looking to see, are there any particular stories that might be good or might actually hold a little bit of interest in these rather volatile times. And as I said, this is the monthly chart because I wanted to fit in all of the price action. But you can probably see that even though we had the pre-market around there is down to around about $23. This is the US listing. We have been trading in the last month or so up towards above $25 into the $30. For those of you who have joined us for many, years on the Monday Market Update, well, that is quite something, because really, if you look at this here, and as I always say, I'm a better trader than I am an artist, so excuse my drawings, but basically, you can see really for about the last 6-7 years, invariably we did not do much, other than basically bounce our way around between about $7 to $11. Really, that was about it, and which was quite a come down here from where we see, $140 right just in front of the GFC. Okay, great uptrend, and it's never really looked back. That kind of scratchy head and shoulders pattern, and basically you can see it was one-way traffic. And as I said, I've covered this on and off for years, and never with any kind of real joy about Deutsche Bank. And the reason being that whenever I've been in rooms over the years, okay, with Deutsche Banks, they tend to be the most loud, outspoken, arrogant types in the room. That's how you can always tell the Deutsche Bank types. But invariably, they have also always been on the wrong side of every big move, all right, whether it be the euro, whether it be property, whether it be oil, crypto, whatever, they were always on the wrong side of it. And they kind of let's say they tarnish their reputation with me. I'm used to spending times, whether it be on the battlefield or the sports field or a trading floor or a boardroom. Namely, if you're going to talk the talk, you have to back it up with being the best at what you can do. And invariably, there was always a huge dissonance between, how Deutsche spoke and actually how they operated. And ultimately, you can see that has been reflected in the share price over the last 15 years or so, even more. But, maybe there is a fresh acorn grown, those of you like Stan Weinstein, Weinstein's his stage analysis style, which is, I use parts of it myself. It's very good. Some people would look at that as now, we've broken out of a stage one base, and now we're into kind of a stage two, into an uptrend. You can see that big 200 period moving average there is looming over it around about $28. That to me would be the first magnet in terms of price drifting towards it, but then it has to do something at that. Okay, it has to get above it, and I'd probably be saying that really it needs to get above $30 here. Okay, see how it's been sort of support for a while. I'd be wanting to say, really, I need to see it get above 30 and hold above it. That would be a scenario I would look at, all right, for, let's say, if it was this a longer term. So, as I said, it's had a good year at a time when everybody else has basically been struggling. Talking about financials, all right. Here we are, Goldman Sachs. This is back to the weekly chart, Goldman Sachs GS, and listen, I said this a while back that it's difficult to have a good bull trend in terms of equities if financials aren't part of it, and certainly we can see, and we've covered in the past, an awful lot of the big banks were in a fantastic trend there, weren't they? Really, absolutely beautifully moved. But the last couple of weeks have not necessarily been terribly pretty for financials, banks, Goldman Sachs. They themselves, I think Goldman Sachs came out with, I think they're now talking, about a 35% chance of recession this year in the US itself. But if we look at the Goldman Sachs chart itself, as you can see, great trend. But then what ended that trend there? Very often, as I said, up here at $660, we print ourselves a bearish engulfing candle, which is also a bearish key reversal. Price pushed to a new high, rolled over, closed beneath the low of the previous candle. And then what we did, and you can see for yourself, we sliced down. And where did we find support? 520, which is also the weekly 50 period moving average, and we kind of bounced our way up off that. If you remember last week, we talked about those bounces we'd seen on the big American indexes, but you can see last week's candle was a reflection of what we're seeing in terms of markets and sentiment, all right? And it's a bearish engulfing candle. It's not a key reversal candle because it didn't close lower than the previous candle, but it's a pretty bearish candle there, isn't it? Okay, and as I said, I'll be watching to see, does this drift its way down to the 50? We bounced last time. What does it do this time? That's the way I'd be looking at it. That would be my kind of a scenario to work with. And we can back that up by looking at what we see here on XLF, okay? XLF, which is the financial ETF, okay? And you can see for yourself, all right, it is pretty much mostly just followed what we saw in Goldman Sachs, JP Morgan, etc. A few of those big American banks, okay, drive that ETF, and you can see. But once again, what happened there a couple of weeks ago, we basically broke to new highs, and then we had not one, but two bearish engulfing candles, bearish key reversal candles where price pushed to a new high and then closed beneath the low. We did that again. And then let's clear this off. And, what we saw here was, you can see price, it didn't drop to the 50 like Goldman did, but, you can see it bounced. But what did we do last week? Last week, we, back up at 50, where the 20 period moving averages. So you've got a, big round number, the 20 period moving average. We printed, a lower high that is also a bearish, rejection candle, bearish pin bar. And so once again, I'm going to be curious to see whether this week the scenario is, over the next week or two down towards that 50. Okay. Now, of course, this is going to be an interesting week for us because, of course, it's Mr. Trump, isn't it? So, of course, today we have got all sorts of shenanigans going on after the weekend. But, of course, this could all change over the next 48 hours, and by Friday, everybody's big buddies and friends again, okay? And everybody loves it, and we get a real V bottom before markets ratchet up. But based upon what we see here, okay, my view and my scenario would be to be looking, are we going to drift our way down to that sort of 47 where the 50 is, okay, making sure that this is now we've printed a lower high. All right, so there we go. There's a few charts of interest you might want to add to your watch list to have a look and see how we play out over the next couple of weeks. So let us now switch across to the live market and see what's going on there. So just bear with me for a moment, and we'll switch across to the other charts. Okay, so let's just bring up the live charts. Okay, there's always far too much going on here. Let's boom, boom, boom. No, it's not what I want. That's my other one. Okay. So here we go. Hopefully you can still hear my voice. Hopefully you can now see the charts. What have I got here? This is my indices chart. Just wanted to bring this one up first. Lots for us to talk about. So what are we looking at here? We've got Dow weekly, NASDAQ weekly, S&P weekly, Russell weekly, FTSE weekly, Nikkei weekly, DAX weekly, and oil. Interestingly, oil continues to sort of flirt with $70, all right, but part of that is, I think, some of Trump's comments about people sort of trying to buy, let's say, embargo Russian oil. But really, what we're looking at is the indexes. All right. So, as I said, Dow weekly. If you just look at what we've looked at in terms of Goldman Sachs and the XLF, last week was very bearish, wasn't it? NASDAQ, okay, last week having, bounced, pushed our way up, we sort of dropped our way down there, okay, and you can see that was a very bearish close, and that already the electronic contract we've drifted lower, and the S&P here did exactly the same. Now, for those of you, as I said, I do, a few other weekly updates, and what I was talking about here the other day was this is now the S&P 500 on the daily, and we drifted down. We had bounced strongly, but I was saying we came up to this region here, okay, and I was talking about, always talking about scenarios up to kind of 5,800, and this we've printed. It's an evening star formation there, okay, at the 200 period moving average. I was saying to people, this is like, it's like a bear flag here now, and boom, that's where we've gone. We've come back down to those lows, and for me, for it to continue, it has to break those lows. Okay, it might come down and come back up and test it and go down, but that's what I'd be looking at now. And the let's see, even Nasdaq did variations of a sort, perhaps not as pretty, okay, as the as what we were looking at. Let's use this as what you've seen there on the S&P, but I'm hoping you kind of get the idea in terms of as a counter trend line break. This was a bearish engulfing, bearish key reversal candle, and that's what we're playing and stuff. And as I said, at the moment we'll all be bearish. Mr. Trump could come out and say something, and then we're all friends again. But you can see the sentiment there. Okay, that is that's entirely bearish. There's nothing happy about there. But what you can see is Nikkei from overnight, is leading us. Is leading us lower on that. Okay, and that's what you're kind of looking at there, right? We have already gone through that low from earlier in March. Close to home, Europe DAX. Okay, we talked about this a couple of weeks ago. Great run, but a double top there. Double top on the weekly chart with the second leg lower and a bearish rejection candle. We followed it through in this last week, and this week we've started lower as well. I go down to the daily chart. All right, you can see, it's a double top. It isn't the prettiest of double tops, but what you want and what you get are two very different things. It's about being able to work with what you see, and what of interest to me is this is the end of the month, the end of the quarter, and today we are we're trading lower than the daily 50 period moving average, which we haven't done since since back in November. All right, now of course this could change this afternoon. Of course it could. I think it's unlikely, all right. But what I'm intrigued there, okay, maybe let me just, if I just try and draw this on here, is I'm kind of intrigued by this. What's this? 22,250, 250 area. Is this going to be a shelf, all right, that we're either going to bounce off or crack? Perhaps we get some caring words and we get a drift up back up into the 20 sort of 22 23, maybe that's one scenario, okay. And if we form a lower high, a drift, that would be a look I'll be working out for, okay. But yeah, it's going to be an interesting week, ladies and gentlemen. All right, hold on to your hats. Close to home even more, the UK FTSE. Look at that on the weekly chart. The last couple of weeks, we talked about kind of bearish rejection, a little bit of a spinning top there after last week. we talked about it, how here on the daily chart, see how it just kind of doing nothing really, isn't it? Really, it's squeezed between the 50 and the 20, and you can see, that's just global nervousness just dropping us lower there, isn't it? Remember, it hasn't broken these recent lows like the Nikkei has, okay, but yeah, I'd be waiting to see what the score is there, okay? That's not a terribly bullish end to the week, is it? Or end of the quarter, sorry. But where there has been some bullish moves, is of course is continuing in gold. All right, gold is weekly. Gold is still pushing to those highs. Okay, all right. There is just anxiety nerves. Remember, we said last week I thought we'd come back and test 3,000 again. We got near it, but then bang. The kind of market anxiety. Everybody just pouring into gold. I got like a flyer through the letterbox today and stuff, telling me that there was a company coming to do a gold and silver show in the local town hall where people can sell their gold and silver at competitive prices. Yeah, I'm sure they are competitive for them. All right. So when you start seeing these things, that's always an indication that people are getting interested in it for the wrong reasons. But anyway, silver weekly chart continues to grind higher. We had a week where we've had that. That's the highest weekly close for a while. All right. Weekly closes are important to me. All right. Yep, that is. That's the highest weekly close at 34.10, for years. All right. So, that's the sort of thing you have to take note of there. Okay. That's what we've been seeing there on silver. Bitcoin, last week, same as Bitcoin is increasingly, everyone I know likes to talk of it as digital gold, but if anything, that is more like, that's more like the American index. That's more like the DAX double tops. Okay, come down, then sort of, pulls back, but it's just forming a lower high now. Of course, as I said, all things could change, but I think 80,000. I reckon 80,000 gets tested again myself. All right, let's go and we'll have a look at dollar and a look at maybe Aussie, and then finish off on sterling. We'll fly through as always, as quick as we can here. Okay, so as always, I have got tons of packages when you've got trading view and a couple of MT5s and a couple of MT4s and stuff rolling and what have you. It always takes its bit of time out. Come on, that's and it always takes its ages at the most inopportune time. All right, this is my US dollar profile. US dollar profile, right? Aussie dollar, Kiwi dollar, Euro dollar, pound dollar, dollar Swiss, dollar yen, dollar CAD, okay, and dollar index. Let's just have a quick look at the dollar index. What's that telling us? Well, dollar index weekly chart. Okay, we talked about having a little bit below here last week. Okay, having tried to pump way up, we've come down, but I still think there is an element of dollar strength there. I wouldn't exactly say, it's not like this kind of dollar strength, but I think there is support there, okay? And maybe that is a case of people's reflections on tariffs. If I go down to the daily chart, I talked about this last week. We had a bit of a double bottom. All right, there on the daily chart, we've broken out of it. There's no surprise to come back down and maybe test before we drive up to that 200 period moving average. That's one thing I'd be looking at. That would be my technical view. But of course, President Trump gets on Twitter, that all changes in a heartbeat, doesn't it, ladies and gentlemen? You know the score. Hence why you always make sure you manage risk. But you can see for yourself there. That's what I'm looking at. That's what I'm looking at there. Okay, and of course, as I said, we've got end of month, end of quarter, Trump's tariffs, Liberation Day, and then you've got non-farm payrolls on Friday. It's going to be an interesting week. All right, so you keep your powder dry for the best shots. Right, and make sure that you're managing risk constantly. All right, so that's what the dollar is telling us. Okay, and the story is not massively different. All right, okay, from the others. We'll move across. What I want to do is have a little look at Aussie dollar. Aussie dollar's bottom of the pile. Aussie dollar. Okay, I thought we might have been getting a breakout, but actually, it looks to me like that is a continuation pattern. Aussie against Japanese yen, weekly chart, tapped by the 200, but the trend is still to the downside there, isn't it? Aussie against Swiss franc, okay. Trend is still to the downside. Pound against Aussie, all right, bang. You can see it up there. Even Euro against Aussie to the upside. Aussie against Kiwi. Well, Aussie against Kiwi they're just always in a perennial fight with each other. Even the last couple of weeks there, look at Aussie against Canadian dollar. It's just going sideways, isn't it? Because all of those com dolls, they are the village of the damned at the moment, and the ASX, the Australian index, that itself has just done the same as all these other indexes there. So Ausie's bottom of the pile, all right, and will continue to be so. All right, there's nothing really else I can tell you there. Hopefully, you could have seen that all for yourselves. Right, let's quickly finish on sterling. I appreciate we're overrun by a minute or two, but that's because I'm always trying to share as much as I possibly can with you in our time together. I appreciate we're always flying through. All right, so this is my pound profile: pound against dollar, euro against sterling, pound against Aussie, pound CAD, pound yen, pound Swiss, pound Kiwi, FTSE. All right, we've looked at FTSE already. We've looked at we have looked at pound Aussie, pound strength Aussie weakness, pound New Zealand dollar, pound strength New Zealand dollar weakness, pound Canadian, pound strength Canadian dollar weakness, $. Weak. There we go. Not a shocker. The one that basically grips my mints the most is pound against Swiss franc. I talked about how I thought maybe we were kind of coiling up. All right, you can see that kind of scruffy trend line. We just can't close above it. Today's price action has been rather, rather interesting on the open. Look at that gaps, okay, gaps there, and how that price has reacted on there in terms of on an intraday basis. Against the yen, last week we had a bearish pin buy, even though it's a bullish close. All right, okay, the big wick giving us a rejection, and that has continued last week. All right, that continued. We came up to the 200 and we pushed higher. It's scrappy. All right, that to me is an indication of yen is perhaps stronger than because the risk off is strengthening, and sterling strength is not as perhaps as full on as we thought. If you look at pound against cable, right, well then we talked about this last couple of weeks. We rallied up to 130, and then we're putting those, I would call those indecision candles. That's a bearish rejection candle. We go down to the daily chart. I'd say we're getting squeezed between 130 and the 20-period moving average. Is this, an ascending triangle that we're looking to break out? Well, I think a lot of that is going to be based on A, tariffs, and B, Trump, and C, US data. And really not much any UK data this week. We all had it last week, but I think that will be that US dollar data and stuff, and political moves will be the thing. Either it'll blow its top, all right, at 130 will blow and we'll go higher, or we roll over and run out of steam if there's a flow to the US dollar. There's no price action on the daily chart that's giving me any real indication, okay, that it's ready to do one over t'other. Finish with euro against sterling. I said we'd come back to this. Euro against sterling, weekly chart. You've heard me every week banging on about how the 50-period moving average has acted as good resistance, all right, even after this low here. I did talk about how this low was still, it's still a higher low, and then we reversed off here. And last week, look at that. I look at this now as that's a rejection candle in terms of this bullish candle, a weekly 20-period moving average, which has been in a downtrend, has acted as very clear, okay, dynamic resistance. Has that now flipped? Has that PO20 flipped to being support? And are we just coiling up here between euro and sterling? Okay, are we coiling up here? Let's go to the daily chart. I wonder if I would look at this here. Excuse my drawing as always, but you get the gist. I like flag patterns to be ended with big bullish engulfing pin bars, and you could say that has been there if you look at that. So I'll be interested to see how that plays out. Then that is all to do with tariffs and whether who gets hit the hardest by tariffs, us or the EU. That's literally, I think that's literally what that's coming down to. And we will have to wait and see how that plays out over the next couple of days, ladies and gentlemen. All right, there we go. Let's draw it to a close there. Apologies, we overran a little bit, but as I said, there's a lot going on. I want to share as much of that with you as possible. As I said, the Monday Market Matters webinar will be on at 2:00 here in London, to London time, 2:00. You're welcome to join us. Alternatively, if you're at the IX Trader Show on Friday, then by all means, please come and join us. Okay, come and say hello, and it'd be great to chat with everybody. Take care, everybody. Trade well. Make sure you're managing risk this week, all right? And I'll speak to you soon. Many thanks.